18 exclusive sources are telling CNBC-TV18 that the life insurance industry is working on a way to cut distribution and commission costs. Yash Jain is here with all of those details. Yash, what are you picking up?
Well, the life insurance as well as the general insurance industry have moved in a big way when it comes to cutting down the distribution as well as the commission cost incurred on the sale of insurance policies. Very recently, the Insurance Regulatory Board, that is IRDAI chairman, had met the CEOs of the life insurance company. He had expressed concerns on higher distribution cost, higher commission cost, and asked for suggestions when it comes to ways in which the commission cost or the distribution cost can be lowered from the current point. What we've been given to understand from our sources is that life insurance industry coming together has formed a 9-member committee. The purpose of this committee or the responsibility of this committee is to bring down distribution or commission cost. The committee, as far as which is tasked with the responsibility of bringing down commission cost, had its first meeting just yesterday, and there were many suggestions, as we understand from our sources, which were discussed. But there is one very important suggestion where there is a unanimous agreement in terms of the way which the life insurance industry wants to take moving forward towards cutting down commissions or cutting down distribution costs. Now, that way essentially taken by the life insurance industry is to ask for the regulator's permission to adapt a deferred commission model and not the upfront front loading of commission model. What is a deferred commission model? I'll just explain that with one example. If it's a term life insurance policy, the period of the policy is 20 years. The first year commission right now is approximately 40%, and then every year there is a renewal commission of 5%. What a deferred commission model would be is that this 40% which is paid in the first year itself could be deferred across the first 5 years, and that too only if the policy comes up for renewal, which means the 40% which is paid in the first year itself could reduce to as low as 8%, and the next 8% for the next 5 years would only be paid if the policy comes up for renewal. This is a unanimous suggestion which the committee plans to put before the regulatory body on December 18th. The committee is scheduled to meet next week again, where they would be discussing the finer details and the framework as far as deferred commission model itself is concerned.
Very interesting. Yash, stay on, because you're all picking up something on a possible reduction in the expense of management for general insurers. Tell us more on that.
Well, I started by talking about how the life as well as general insurance industry have moved in a big way, towards taking that direction from IRDAI towards reducing distribution cost and commission cost. And just here, very recently, about 10 days ago, is when the IRDAI chairman met the CEOs of general insurance companies. What I've been given to understand from my sources is that the IRDAI chairman himself made a presentation talking about how the commission cost and the distribution cost, despite the GST cuts and their adjustments, still remains very high and needs to be brought down. In fact, what we've been given to understand from our sources is that IRDAI has asked for data for the last 5 years from every general and health insurance company when it comes to their cost of distribution as well as expenses of management for the previous 5 years. And in the same discussion, there were certain CEOs that we understand were of the view, and they suggested to IRDAI that the first step which the regulator should take is to penalize general and health insurance companies which are beyond the expenses of management limit, which currently stands at 30% for general insurance companies and 35% for health insurance companies. And the second suggestion, which also came from the CEOs to IRDAI chairman, was that the expenses of management limit itself should be reduced for vintage or old general insurance companies. The definition of vintage here, according to our sources, would be the companies which have been in operation for about 5 years. The expenses of management limit for these companies should be reduced from the current 30 and 35% by about 500 to 1,000 basis points, and should be brought down to about 20 and 25% for general and health insurance companies.
Yash, thank you for bringing us both of those exclusives. We'll get them up and running on our website very shortly as well, so you can read them in a lot of detail, as Yash just explained. Take a short break. More news and updates follow on the other side. Stay tuned.
"26 years of CNBC TV 18.